one thing that binds you two together is Liverpool Football Club. Today it's going to give away the day that we've recorded this, but thoughts on Trent and his announcement video? Have you seen it?
I haven't seen it. It's an expected thing.
Yeah.
You know, and let's get it right. It's Conor Bradley. We've got a good backup.
I liked how hard Trent tried to get some tears out in that video, but it looked like he was genuinely trying to cry, but he couldn't do. But I know it's a topic. Listen, you've done great this season. You've won the 20. You both know how much that pains me to say that. He's a world-class player on his day, but there must be a tinge of anger about it. Liam, what's your thoughts?
Well, it's a good day for you that he's leaving. It's probably remember this is the day that Jurgen Klopp handed in his resignation. Look how that ended. So I'm sure Conor Bradley will do a good job. So good try, but no cigar, I'm afraid, Dan.
Right. So yes, listen. Another episode of the Disruptor podcast.
Yeah.
So this podcast has been set up by us to really talk around positive disruptors in the cyber industry, whether it's people who are doing technology or services, but generally just people that are wanting to make a positive disruption in any industry. Our guest today is Liam O'Brien. Liam and I have known each other a number of years in a friendship capacity, but also in a professional capacity. And I'm a customer of Liam's as a mortgage broker. So Liam and I had a conversation a number of years ago when he was telling me some really bad news about my mortgage going up. And in that conversation, trying to take a real positive from it, I sat and thought, well, I've been in the cyber industry for 20 years. The status quo of our industry has not been to use people like brokers. It's been very set. Reseller, distributor, and then the technology or service provider at the end of it. I sat and wondered why was that the case? And that then led to Lee and I having a conversation which pretty much started the conversation around building Utopia Cyber, and now we are where we are today. So Liam, what I wanted to do is really talk to you around the broker process as a whole, how it works in your industry to start with, and why you think customers see such value in it. So if you wouldn't mind, just a bit of background on yourself and the company that you own.
Yeah, so we're a mortgage brokerage. I've been in the mortgage industry financial services industry, coming up to 20 years. I've been a broker for probably 15 of those years. I've been self-employed for the last 12. And we kind of built it up now where every month we're doing probably somewhere between 10 and 15 million pounds in lending every month. We punch way above our weight as a firm size compared to others. And essentially where one of my real kind of pet hates is winning a customer and then not taking that customer through the journey over the next 25 or 30 years. Because if you think about it, their mortgage is not just something that they buy once and that's the end of it. You know, their deal comes to an end and they might want to move house, they might want to borrow more money, they might want to pay some of it off. And at each stage of that journey, they need advice. And that's where kind of I come into it really. And that's basically what we do. And where we differ to the sort of traditional, you go to your bank, is that we'll either save you time, and if we can't save you time, we'll save you money. And if we can't save you money, we'll save you hassle. So we can't always do all three things. Sometimes we can. Sometimes it's one of the three. Sometimes if you're just like a really straightforward case, you can just basically go online, go onto Money Supermarket, find the deal. But that's then a hassle for you to organise all your documents, prepare it all, check it all. And how do you know that you meet that individual lender's criteria? There may be something lurking in the background that that kind of prevents it from going through. So that's kind of the difference between what a broker does and just going direct to bank, essentially.
So obviously the companies that you're working with are massive financial service organisations. Why do you feel that organisations, they can go direct, they can have those conversations with the banks directly? What level of comfort do you feel that the customers feel coming through yourselves as opposed to going directly to these organisations?
Yeah, so I mean, it won't come as a surprise that over the years, the banks have had lots of mis-selling scandals, whether it be PPI, whether it be, there's also, I mean, the most recent one is adjustable commission on car finance, which a lot of the banks are kind of involved in. So the banks are really quite tight and regulated because they can't give advice essentially. So these days, the regulation around banks being direct to consumer is so tight. It's so tightly regulated that it's difficult for you to have a straightforward, frank conversation with the bank. Because when you go to the bank, you're talking to the bank's representative. When you go talk to a broker, what you're talking to is somebody who you're basically employing to get you the finance approved, right? So you say something to me, it's not, it's probably not the most straightforward thing that you're saying for me. Maybe it's a level of complication with your application. I can make sure by understanding what that situation is and matching it out with a lender who's going to basically turn around and say, yeah, we're okay with that. And that's the advantage of having a broker is that as a broker, you're a much smaller organization. You're much more you are regulated, but you're less tightly regulated. You're more nimble and you can go to different providers. So essentially you can have a frank conversation with the broker. That is kind of what I'm saying here.
So in the studio, we've got myself as managing director of Utopia Cyber. We've got Lee, who's an advisor to the business, but Lee also has a sort of day-to-day role where he, head of cyber for a financial services organization. So I was quite curious, Lee, from your side, we've got a very sort of fixed you can go and speak directly to the technology providers and service providers, but we have this model of, rather than broker, this reseller distributor model in the middle. It seems like a lot of what Liam's saying is that there's a bit of a mistrust of the large organizations and may bring some transparency and some clarity around that. What do you see that from the reseller? Do you see them bringing that level of value, or is that what you expect them to be able to bring?
Yeah, I would hope they do, but the problem is a lot of times they don't have the amount of services out there. So I'm guessing Liam's got access to many other kind of banks or lenders that he can go to that maybe a normal entity, as I look at security when buying products. If I'm going to a vendor, say I would like to buy this, they've probably got a very short portfolio to look at. What Liam's got is the ability to be able to pull in more people that are outside that portfolio. And I see that where we want to be as Utopia Cyber, to bring in technologies that those organizations won't touch because they don't bring in enough money for the organization. So I guess regarding you guys, Liam, you probably have the ability to be able to bring in specific banks under certain cases that you would probably not get, most people wouldn't get access to.
Yeah, that's more kind of criteria driven. So if somebody comes to me with a specific set of criteria, whether it be to do with their, around their requirements, but it could be their income, their credit history, their income type, or whatever their individual kind of, awkwardness is around that particular individual, we can go. I suppose the phrase that I use with clients quite a lot is we can go off the beaten track to go and find a solution with a lender that's probably a bit more left field and not your typical kind of, it fits with, the big red banks or big blue bank or big green bank. That maybe you think.
And that's the same for us in cyber. If we go out to most resellers, they won't even look at these niche products.
Yeah.
Whereas we would probably want to look at those niche products because they're going to fix a problem we have. There may be a requirement we have that we can't get through those certain products. Or if we go and buy that product, it's just so expensive. Because a lot of times these days, the products are trying to do multiple things. So you'll go off and buy one tool, but then they're saying, oh, we've got this function, we've got this function, we've got this function. You end up buying a massive product for just this little niche thing that you need to be able to resolve. And that sometimes don't give you that kind of capability through going out with a standard reseller model.
Okay. Lee, I think one thing that exists is a common thing with financial services and mortgages and cybersecurity is trust. And I think that trust is really important, whether we're a broker providing services to a cyber customer or you're providing services to an end customer for mortgages. How important is trust within your industry and your role? How are you able to build that trust and then sustain it with customers time and then time again?
Because I'm dealing with the consumer, I mean, I've got 3,000 clients and most of them are regulars. I don't work losing a customer. I think in my industry, I think so many other brokers are so focused on winning new clients that they don't look after their existing client bank. Now, if I said to you, we don't do hardly any social media, we don't do hardly any advertising, we don't do any like email campaigns, we don't do anything of that sort, like all these other firms are doing. Yet we do more business than all these other firms. And the reason we do more business is because we look after the client, we look after the back book. We're there. If I say I'm going to call you at 2:00, I'm calling you at 2:00, right? 1:59, you get your phone call. And if your mortgage deal is coming to an end on the 1st of June, you can bet your bottom dollar you'll get your phone call exactly 4 months beforehand. And that builds trust over a prolonged period of time where clients can I mean, you'd have to speak to my 3,000 clients, but which would be quite an arduous task.
Well, we got one.
Yeah, we're having this conversation. So yeah,
I think time and consistency is probably the two key phase. But also you have to win the client in the first instance, and then once you've won that client, you have to basically be consistent and be regular and be available
and be honest with them as well, isn't it? Because I've had the equivalent of yourself and when I've got mortgages. And one of the things that I found is it's the one that comes to you, tells you why you can't have this mortgage and why you must look at this in an honest manner. Sometimes it's bad news, but you need to know that because that brings trust. And if you just go along and say, this is what we say you're going to do, how do you know it? You're bringing the data helps you get trust.
Yeah, absolutely. Yeah, absolutely.
Well, I think that linking back to the conversation that we had, that you never want to hear that your price is going up by that much in a month. It was a significant amount. But as you said, if you feel you've got that transparent relationship, I'm quite fortunate. Liam's a friend of mine, and I've known him outside of this professional capacity, but knowing him that way, and we built that trust, and we'd then be able to trust him on this. But I think that's really, really key. The transparency is really, really important, but also just being credible. And he clearly knows his market. And I think, something that I've spoken about with customers when we're talking about Utopia is I really don't care which technology or which approach you go with, as long as you go with the right one and as long as you're paying the right fee for it. And that's the thing. I think whereas the model that we exist within Liam is resellers are putting margins on things, and those margins are not visible and they're not transparent, and sometimes they can make little margins, sometimes they make large. So I think that constant transparency is really, really key. A question that I've got for you is, how do you balance, or is it difficult to balance maintaining those relationships with those massive financial services organizations and doing the right thing every single time by your customer?
Well, I suppose this is where my industry it differs to yours as far as I can see, in that with my industry, so 90% of all business or all lending that lenders do comes via broker channel, right? So it used to be 50-50. So the bank, let's say the bank was going to lend 10 billion this year, used to be the half of that would go through their direct consumer channel and half would come from brokers. But now 90% of the business that comes into lenders, approximately 90%, obviously it varies from lender to lender, 90% comes from brokers. So that relationship is already there for me to take advantage of. And I'm not sure how that would translate into your industry, where if you're presenting a solution to somebody, do people directly go to brokers or not? I'm not sure. But that relationship is already there. And so that's the second part of your question, in terms of maintaining customer relationships. Essentially, it just goes back to what I was saying earlier in terms of being consistent, being transparent with clients, and just explaining to them that, look, this is the best deal. Essentially, I've searched the market. This is the best product. This is the most suitable product for you for the following reasons, whatever those reasons may be.
Well, just to touch upon what you just said, so it's gone from being 50-50 till 90-10 in recent times with the organisations you work with. What do you account that to? What do you say? Is it that lack of trust in the big organisations that they need that, or is it just?
Yeah,
You're gone.
yeah. I think trust in banks has eroded over the years, and I think as a result of the eroding trust, mainly driven by PPI scandal, interest-only mortgages scandal. There's been all sorts of other scandals to do with fees and charges that banks charge. Some unscrupulous behaviour, certainly business lending post 2007 in how banks handled all of that. It just trust has been eroded from the big banks, and as a result, the regulators come in and said, well, okay, Mr. Big Bank, if you want to lend, you have to adhere to these rules. And the banks are now so scared of providing advice that they don't actually want to do it anymore. So their banks are quite happy to say to broker community, okay, off you go. Here's our rates. Bring us a truckload of business, and you can be responsible for the advice. We'll do the lending, you do the advising.
I think from an accountability, it's quite interesting that because with yourselves, there's a lack of trust in those organisations. They're quite happy for you to take on that and give that advice and whatever. Whereas in our industry, I think organisations would like to deal direct with but there's a status quo that has existed for 20 years, longer than you've known me, in this industry that I've sat in, where they've always gone to a supplier who goes to a distributor, then goes to an end user. So there's probably like 20 to 40% of margin being added to every single purchase to pay for those middlemen. I think my next question was, if this is asking as a customer of yours, this is asking on this podcast, if I was to go direct to the bank or I come to yourselves, generally it doesn't make that much difference, does it? So the customer isn't really being penalised in any way for working with you. It's almost free of charge assistance to them. Is that the best way of looking at it?
Yes, in a way, yes. You could organise so you could organize your mortgage yourself, right? So I'm not reinventing the wheel, and in what I do, but I can either save time, money, or hassle, or two of the three, or one of the three, and that's essentially what the job of a broker is, right? Sometimes I can save you money, sometimes I can save you time, sometimes I can save you hassle, and that is essentially what a broker does, and you get paid for your services in the other. There is no difference in the product that you get. Realistically, sometimes brokers get broker exclusive deals where you have a slight discount on the rate compared to what the client would get if they were direct to lender. And from time to time, and it genuinely kind of finds itself only with a handful of lenders, you can sometimes get a slightly better deal by going direct to the bank. But what you have to do then to organise that deal direct with the bank is you have to call them to make the appointment. You then have to wait for the appointment. You then have to go on the appointment, which is like an initial screening appointment. You then have to book another appointment to go through something called a fact find. Then you have to go to another appointment with the advisor. And each time the bank isn't just available immediately. You're waiting a week, sometimes 2 weeks for appointments, by which point the deal that you were going for is gone. So dealing direct with the bank is inherently difficult. It's much, much easier to deal with a broker.
I mean, Lee, from your side, I think that there is similarities here in the regards. If you look at the reseller model that we have, in our industry, that's been the status quo for the last 20 odd years, that's involving dealing with multiple conversations. So say, for example, you're going out looking at a new technology, you could most likely have 4 or 5 different solutions that you're looking at, providers, with 3 different resellers, all those people needing to meet with you, needing to get updates, needing to discuss quotes, scoping and all of that. Whereas the model that we're talking about in Liam's way is, well, we can deal with all of that for you and take all of that pain away. Yes, you're still going to eventually have to raise a purchase order onto whichever one you want to go for. We can't take that pain away, but we can definitely simplify. We can definitely save money. And we can definitely not necessarily have exclusive arrangements with the end technology provider, but in the way in which we work with them, we can help them get better costs as well. So I think all of those three things that Liam says is why people should deal with his organization are very relevant to ours as well.
And transparent costs, because that's one thing that's the thing that Liam said eroded the trust in the banks, is the fact that you haven't got the true transparent cost. There's a little thing at the bottom that you didn't realise is in there that's ended up costing you additional money. That's what's eroded it, that trust in the bank. So therefore, the same would be regarding ourselves and resellers. You know, when we're looking at a reseller is going to tell us what product is the current thing that's going to make them the most amount of money. Whereas, as you say, as a broker, we would go across the line and find out what is the best product for the customer. But then say why it's the best product, why they should buy it. They might not choose that as an honest scenario. You guys might not sell the right product to an organisation because the company decides, well, I'd prefer to have this one. It might happen. But you've been all open and honest. You said, this is why it's the best price. You know, this is what it's costing everybody. This is why the product is the right one for you. And I think that advisory is the massive scenario in this. Because that's why we go out to a broker when we're coming to get a mortgage. Because if I wanted to go and look at every single mortgage that's out there to choose the right one for me, I would spend days and days and days looking at it, probably make a mistake, choose the wrong one, and that'll cost me a fortune down the line. I don't have the experience. Going out to a broker gives that capability that they're used to seeing the products. They're used to seeing what's going on. You tell them and what you need, and they come and find the right solution for you. That feels much better. That's not what I get at the moment when I come to Pure Solutions. I get what you after, oh, this is one we'll sell you now.
I think the important thing from our side is in the combined. So, you know, you've got great technical, deep knowledge of your industry, Liam, but you've also got good commercial knowledge from the customer's perspective of getting the right price. And between what I bring to the business and what the advisors bring to the business, I've been in the industry 20 years, commercial experience. I know what good looks like. I know what discount levels you should be going to, etc. Whereas yourself and other people involved, other advisors involved, have got 20 years plus of cyber leadership experience. So they get effectively getting all of that, and they don't have to pay any fee for it. The fee is then paid at the back end by whichever provider is successful. I guess from our side as well, the benefit from the providers that we're working with is for them, it's kind of no win, no fee lead generation, right? We bring them into a situation, there's a broker fee agreed, and they only pay that broker fee if they are successful or if they're not. So that's kind of why it works. So Liam, this has been really, really interesting. I really, really appreciate it. The last question that we've got is actually set by AI. So we're finishing each of these sessions by asking AI to ask questions. So we've gone to ChatGPT, other AI tools are available, but we've asked the question. But the question they've asked is, what innovation have you seen in the last sort of like 10 years within the broker industry in your side, which has made a massive impact in your day-to-day life and to the service that you can deliver to your customers?
Yeah, so there has been some developments here from 10 years ago. So we had mortgage sourcing systems, which basically you pop in, what the valuation purchase price is, how much you want to borrow over what term, whether it's a fixed rate or a variable rate or whatever. But there's much more to broking than just popping your details into one system. And there are more and more tools that have become available, particularly more in recent years. So every lender has a different perspective of affordability. Every lender has a different perspective of criteria on what they accept and what they don't accept. But now there are actually tools out there where you could put the client's income information into one system, and that one system then talks to all the individual lenders' affordability calculators. So you can look on a spreadsheet, which lender will lend the most, which lender will lend the median, and which lenders will lend the least. And that's quite a useful tool because back in the day, before that tool was available, you used to have to go one by one checking with each individual lender. So now, because of this software that's out there, and it's available to all brokers, I can just quickly work out which grouping of lenders are if affordability slight cost, which grouping of lenders we can look at. Without going down the rabbit holes looking at different lender criteria and affordability. There's also a really useful tool out there that I found where you're renewing a client's mortgage deal. So let's say their mortgage deal is coming to an end, and let's say I've organised the deal for you at say 4.4%. That's due to start in 3 months' time. I can tell this piece of software what deal we've booked in for you, and that piece of software then monitors that lender's existing customer rates. And when the lender, or if the lender happens to reduce those rates, it sends me an alert saying, you need to log into Dan Killeen's mortgage deal because there's a better deal available. So whereas that all used to have to be on a manual basis. So it is heading there. But I wouldn't sit here and say that the mortgage industry is the leading kind of industry where it comes to use of AI, because I think a lot of our industry is driven by. Well, I think the average age of a broker is probably mid-50s. So I think a lot of brokers are kind of quite reluctant to use technology in that way. I don't really know where AI comes into it, but perhaps one day AI will take a slice of the market. But hopefully, I'll be even further established before that happens.
I'd like to say one thing. Why I like mortgage brokers. My last mortgage, we came to the end of our mortgage, so we're in the last 2 years of the mortgage, and we're under certain criteria, and the mortgage broker actually came to me and said, it's cheaper for you to get a mortgage if you get more money, because there's more banks are actually able to give you over 25,000, which is what we had left in our mortgage, than 21,000, which is where we're at. So if we actually lent more, we actually got a cheaper rate, which is unbelievable. It's a very strange scenario, but that was a benefit of having a mortgage broker.
It's because, and there's a reason for that. It's because the bank basically makes a set commission off the back of it, because it kind of borrows the money from elsewhere. And if it borrows below a certain amount, they then get penalised. So that's why they have tiers. You know, with Santander, by any chance?
I'm not going to say. This is going out on a podcast. I'm never going to say that.
Asking a cybersecurity professional about where the bank is probably not a sensible thing. But anyway, Lynn, I think that's really useful, because we're starting this journey in the broker world, in cyber. There's not anything like that right now. But from a data perspective, that's definitely where I think we need to be in the future in regards to automating some of this, automating some of those conversations with organisations, rather than just waiting for the renewal date to come, and look at obviously understanding as they go through that journey, where their needs change, what their compliance needs are that were different to when they first bought that technology. So there's lots of things we can do in the automation and data side, definitely.
And I think even that kind of thing what I just said there regarding my mortgage, the fact that we understand the products and we can actually speak to the actual providers of the product and say, what is actually your licensing model? So if we bought so many licenses for our customer, can we get you a cheaper price? The cost model helps in that scenario, because they will be able to buy a product at a cheaper rate because they've got more licenses. So
definitely
understanding what the customer needs, may be able to use that knowledge to be able to get reduced prices as well.
Absolutely. Well, Ian, listen, thank you for that very painful conversation a few years ago. Nothing, you made it as easy as you could in regards to dealing with that. I think that, thank you for joining us tonight. Really, really appreciated it. And and thank you for joining us on the Disruptor podcast. Thank you.
Thank you.
Cheers.
You're welcome.
Thank you. Cheers, buddy. Thank you for that.